Top of them, mother of all short squeezes to you. What's going on? My name is Andrew, and we have some suspicious tweeting going on. Started off a couple of days ago. This was from yesterday. GameStop been away for the past few months. What did I miss? And it really feels like that a brand new persona has started to take control of the Twitterverse of GameStop. So not only are we going to cover this in a second, but we're also going to cover some FUD articles, some fear, uncertainty, and doubt of why Blockbuster of gaming will eventually fail over on Seeking Alpha, and why the bubble will burst. This is going to be followed up by a rebuttal from Wall Street Bets founder, someone from CNBC, who is going to be able to give us a sense of why bubble is a boomer term. And if this all sounds good to you, it's because it's being recorded hot and fresh from you after our 7-hour live stream. Come watch us bell to bell and give us a quick look-see, as well as looking at down and the like counter below, because we are back home. Thank you guys for coming along as always, because we want you to see, tell us which comment you guys were before 1,200 likes, if we haven't gotten there yet. Let's start with this. Bubble is a boomer term, right? We are looking at this Seeking Alpha article in just a second. As bubbles grow larger, they get fundamentally more unstable as there are larger and larger expectations built in. In the case of GME, it's 140x best case multiple has coincided with the multiple other bubble variations, yada, yada, yada. Is this just hype? Is this just fear-mongering from the boomer universe? Let's see this quick 2-minute cut piece from CNBC television talking to the founder of Wall Street Bets.
In a macro sense, you describe a new era for retail investors and all the things that go along with it now, and YOLO and I made a lot of money. Whoa, I lost. Look how much money I lost. And it's all, I don't know whether it's gamified, but things have been going pretty well overall with the market. And some people have still lost great sums on some of these bets. What if things really did turn south? We couldn't turn away, like in the financial crisis, we turned away a whole generation of investors from Wall Street and from investing. Well, couldn't that happen again with a frivolous sort of approach to all this, or is it really ushering in a new democratization?
Look, you didn't turn down an entire generation. You created this entire generation, right? It's because of what happened in the financial crisis that Bitcoin was born. A lot of the language around there was revolved around this idea of centralized power, centralized money in government, et cetera, et cetera. And you also have this new demographic of market participants, these younger millennials of Generation Z, that are taking the market from their own perspective. And look, it's a zero-sum game. It's always been a zero-sum game. People will lose and make money. Warren Buffett loses money. The idea is that now you or the individuals are able to take control and lose their own money. As far as what's going to happen if the market goes up or down or whatever, they don't care. Bubbles, as far as I'm concerned, is a boomer term. Like if the market starts going down, kids go from buying calls to buying puts. They just need to know which direction to bet the market in, and that's something they can do through this the Wall Street Bets app that they can see on wallstreetbets.net, and they're able to vote and they're able to rebalance these things on a very regular basis, much faster than regular ETPs, in a really transparent manner.
So not that we want to be able to give Wall Street Bets like the best benefit of the doubt, but you can really tell that CNBC basically has no idea what's going on. They just talked about gamification in the sense that, like, oh, you're going to be able to aggregate the gain and loss on and into the actual mechanics of this application, and then now showing some swaggy stocks, this section of the sentiment analysis tracker, as if this is part of some sort of like look data, look, we have no idea what this looks like either, not really explaining it while the Wall Street Bets founder goes through. So in that sense, yes, bubbles are the most fear-mongering you can possibly get when a newer investor wants to come into the market and make a lot of money. Essentially, this is pulling yourself from the bootstraps. Oh wait, don't pull yourself too high. We don't want you to get too far ahead. Before we dive into this FUD article and actually give it our own peace of mind, hey, what is going on here with GameStop tweeting out, oops, mother of all short squeezes? This is what MOASS stands for, and it is a comment to this Mass Effect commercial, right? 5 hours ago, the groundbreaking sci-fi epic returns. This is from GameStop's official Twitter, Mass Effect Legendary Edition. Oops, they meant to say MOASS Effect Legendary Edition. That doesn't really make sense, does it? But them tweeting out and acknowledging, breaking the fourth wall, giving us the mother of all short squeezes seems to have started something on the Super Stonk subreddit. It looks like this is not the very first time, right? They are, it really feels like GameStop is starting to become a brand new persona on the Twitterverse, the clapback universe here. But I want to be able to pull up just when I thought I couldn't be more hyped. The mother of all short squeeze tweet, this one right here, was sent from iPhone. The rest are from Twitter, web apps, Salesforce, etc. And yes, I did go in and check almost all of the tweets, even the comments on GameStop are all sent from iPhone. The only other person in this GameStop universe that tweets from iPhone is the man himself, Ryan Cohen. So at the very least, I can give that this person that is tweeting, oops, mother of all short squeezes, my bad, is not the same person that made this commercial and is not the same person that has been tweeting regularly for GameStop. So if Ryan Cohen is coming in and sneaking us a little bit of a catalyst here, that is exciting stuff for GameStop's Twitter, but also dangerous for the amount of signals that we have already been relying on, especially since the fact that last few times that Ryan Cohen has tweeted incredibly unrelated things, we have seen gamma squeezes in January and in March. Let us go into these articles real quick and understand why the blockbuster of gaming will eventually fail. They are trying to say that this is a pivot to e-commerce, and they're trying to clean up their balance sheets, right? They really did. Paid off their debts, is looking real nice and clean as of right now. The long-term problem is that the company faces margin pressures from a number of angles. The current valuation and business challenges present a lose-lose outcome to investors. So this is fear, uncertainty, and doubt. 30 comments, 5 likes. Let's give it a quick look-see. Consider a meme stock. Gaming retail company GameStop Corp has seen volatility in its share price over the past year. Unfortunately, the data does not point to the outcome of a short squeeze. While the company stabilized itself and now operates on a debt-free basis, the company's needed capital investments to flesh out an e-commerce strategy, in addition to secular tailwinds, lead me to believe that GameStop will be unable to sustain long-term profitability. In the event of a successful execution, the valuation will take many years to be justified. For these reasons, GameStop will be a very poor long-term investment. Let's outline their bearish thesis below. Let's actually just force our way down to the conclusion here, making sure that you understand that multiple margin pressures is their thesis here, right? There are successful e-commerce web models can be powerful. The formation of the e-commerce model can be costly. Infrastructure needs to be put into place. They're kicking out George Sherman, the old CEO, a brick and mortar CEO, in favor for someone who is possibly going to be a little more tech savvy, possibly someone who can be the Ryan Cohen to the Ryan Cohen, right? Because Mr. RC is going to be the chair of the board of directors, but it's not unheard of that those two positions can be the same person. So we are crossing our fingers that might be the case. But they're saying that e-commerce is going to be a hard transition. However, mainly, and I hope the GameStop needs to repair its brand image is not in connection with the clapback mentality of the Twitter sphere GameStop right now. It feels like a mismatch of where GameStop wants to be in terms of the e-commerce giant, the person that is going to be your go-to, the Amazon killer for gaming. But at the same time, it's a start, right? At the very least, it's getting GameStop trending and putting it into the zeitgeist of the investment world. When you put all of this together, GameStop offers a terrible risk to reward for investors. In a worst case scenario, GameStop fails to execute its e-commerce model and goes out of business. In the best case scenario, investors will wait years to justify the current valuation. When the outcome is lose-lose, they would rather not play at all. All I need to do is go head on over to the Vortex page to just give you guys no, this is not right. let's take a look here. If you guys haven't had a chance to take a look at the Ortex link down below, it's freshly minted from today's live stream. We are looking at the most up-to-date information, especially short interest information, because of up-to-date screening of 85% of the securities market. 23% is still the short interest percent of the free float. We used to have to wait for the FINRA report to come out on a weekly basis. That's still the most accurate source of truth. We're still going to wait around for that on a bi-weekly basis, but now we have Ortex updating us on a daily update, right? Live updates, and even gives you changes from Wednesday at 7 a.m. Eastern, right? So we have 23% here as a short interest of percent of float. What we're looking at is company independent, right? The e-commerce model, fantastic, right? With the fact that Ryan Cohn is running the company, fantastic. However, what we need to understand is that all shorts must still cover, and this number stays much higher than where the Volkswagen squeeze was. So as of right now, point back to this number, go into Ortex, open up your own account, be able to show your friends and family, the people that might have started to turn their backs on you, or at the very least, don't understand the financial systems as well as you do. Give them a little bit of financial education with this understanding. If you want to follow the markets along with us live, the best way to do so is to click that subscribe button. On our way to 81,000. We're going to hit that this week, and we're only about 300 subscribers away. Would love to have you along for the journey. And if you wanted to take that extra mile, hit that join button next to the subscribe button, because then you'll be showing up on the end screen with the Moon Platoon members, Meatball Space Legend tier, and the Gorillionaire tiers, or Patreon will also do roughly the same. Once again, thank you guys for joining, and we will see you in the money. Peace.